What's up, guys? William Ryan here, back with another video. And in this video, I'm going to be potentially going short here on one of these indices. I just took a little short in here, a little scalp. This is not the optimal advanced setup, but this is a institutional order flow entry drill. So I went short based off this gap in here. Okay, but we're gonna see if we want to get any type of retracement in here. This was very, very beautiful on the daily setup. We have that optimal advanced setup here on the daily. The William percent R. Trading into this fair value gap here. Right? And then since rejecting, we've now come up to the consequent encroachment of this gap. Okay, see how the bodies are respecting that? Okay, so if we're going to be really bullish, in my opinion, we want to close above the consequent encroachment of the gap. So being in the premium half of the gap, that's a good sign for continued bulls for the high here. Right, but we can see that Dow Jones, right, is just consolidating really. We're back. Actually, we never closed below this fair value gap. So this is still very, very bullish. We have optimal advanced setups to go long as well on the daily chart. So going back down into that 1 minute chart. Just going to look at a 5 minute quick. Yeah. So look at this fair value gap, right, that we keep closing above. So I'm actually going to switch my narrative after doing a little bit deeper of an analysis. I like potentially going long in here. Okay, and the reason being is us coming down, taking the discount level of this gap again. We have a fair value gap here. So in this instance, guys, my stop loss is going to be below the fair value gap because we want to see the fair value gap hold price. Right, not only the fair value gap, but the daily redelivered rebalance, aka a balanced price range. So we want to see price start to move higher here. And notice how when I was on a lower time frame, I kind of got stuck. Right? This is another very good lesson in and of itself. So we don't want to get stuck on the lower time frame. We want to gather some context and gather some data on the higher time frame to then apply to the lower time frame. Stop loss below the FVG. We're going to look for these equal highs. And now having this context in mind, now having this context in mind, okay, we're going to want to look for higher prices. Okay. Just 1 second here, guys. All right, so we're targeting the buy side liquidity and also the fair value gap up here. Because at this point, we've worked this gap so much on the daily chart, okay, that we're going to want to see price start to run away from this area. We're not going to want to see price continue to stay in this gap. We're going to want to see the Dow Jones actually catch up to the NASDAQ and to the S&P 500. So our stop loss is below this fair value gap on the 5-minute. Right? And like I keep saying, we're going to be seeking the liquidity above the marketplace. We'll just stay on a 5-minute chart, guys. The stop can actually go right below this low. So we're going to be targeting that 2-to-1 risk to reward ratio. Nothing less, nothing more. All right, and this is on a 5-minute chart, guys. So this may take a little while to play out, but that's okay. I got lots of things to talk about. We can also go down into the micro time frames and look for our optimal events set up to go long as well. How ironic, we actually got our optimal events set up and we actually went long on the 15-second chart here. It's kind of funny, right? You have order block, fair value gap, and then William percent R signatures. So we were making a lower low on the indicator. At the same time, we were failing to make that lower low in price action. So, right, we can also apply SMT, right, in terms of the William percent R and the actual price chart itself. So a lot of times when we're studying SMT, we will have one asset class taking out liquidity, so sell side liquidity, and then we'll have the other asset class coming into fair value, right? That's typically what happens when we're looking at SMT divergence. And so we typically have that, right, on the William percent R when we're looking at second leg distribution. So that's one of the ways that I like to use the William percent R is using the SMT concept and applying it to the indicator. So we have price failing to take out this low here, okay, but in the price chart, okay, we're coming into that fair value gap, the order block, the balanced price range, but in the William percent R, we're taking out the liquidity, right? But in the price chart, we're failing to take out the liquidity below this low. So what does that indicate to us? It's indicating smart money accumulation for longs. And it's funny how, I didn't mean to do this, but it's funny how I got long at that optimal advance setup on the 15-second chart. So knowing this, your stop loss, guys, can go below that 15-second setup. And here's a very important level of price action. So we're going to want to see this level here, right, be traded to and through it. And then if it comes back down to the top of that daily fair value gap, then we can potentially look for more longs. But in this instance, guys, we want to see this buy side liquidity pool ran through with some speed. Okay, so this is the draw on liquidity, and we want to see this candle close above this fair value gap. So notice how at the beginning of the video, guys, that I wanted to go short in here, right? But after doing further investigation, going to the higher time frames, scrolling out to get the bigger picture to see what was going on, going to the daily, to the 4 hour, to the hourly, right? This gave me an opportunity to reevaluate and make a better decision, a much better decision. Like this 5-minute setup here is beautiful. And my apologies, guys. I posted on my Instagram that I was going to be going live this morning. And I actually accidentally slept in. Unfortunately, that's just what happens sometimes. Sleeping in 4-hour increments really tires you out sometimes, kind of catches up to you. And when my body tells me that I need sleep because I don't want to get sick, right? So I got to listen to my body in that sense and kind of obey what my body is telling me. So you guys can clearly see we have that optimal advance setup on the 5-minute, just playing out beautifully. What price level do we utilize here? Okay, the 35 level. Price comes down to 37,435. We utilize that fair value gap, the order block, and most importantly, the daily redelivered rebalance. Okay, so we have I can see price actually coming up into here. Targeting the buy side liquidity there, but we'll see what happens. I want to see it expand through these highs with some speed. That would be nice, but our 2-to-1 is already in place. Right, so we have the optimal advance set up on the 5-minute. Okay, and higher time frame is bullish. So away 1. So time. We're in the PM session. Notice how a low gets created here at 130. Okay, 130 is halfway between 12 and 3. Wink, wink, nudge, nudge. So our entry was at 37,435. I actually want to take a partial off here, if I'm being honest. 3. So we're actually going to take a majority of the position off. So we're going to take 50 off right here. Stop loss is going to go to break even. And then we're just going to let the rest run. So we're still anticipating higher prices. Right? We want to see if we can push a little bit higher for this buy side liquidity pool resting above these relative equal highs. So I took my profit, right? Took my partial, took half the position off, and now we're going to see if we can gain some legs moving higher into this buy side liquidity pool. So we want to see if we can get another big bullish gold candle. Okay, that's what we would like to see, preferably. So we want to see one more or two more big bullish candles here for the buy side liquidity resting above the marketplace. Whenever we're trading optimal advance, guys, okay, this setup here, you're going to want to utilize and study the price action before our entry. So notice here how we have a consolidation before price rips down, okay, creating the SMT on the indicator coming into the fair value gap. So we're going to want to study how price behaves before we get our setup. Okay, and oftentimes what we want to see is a consolidation, okay, before we rip lower, before the manipulation lower into our area of interest. Okay, another thing that I'm going to touch on is this low in here. Okay, notice how the low is located in the middle of the range of the Williams percent R. Okay, notice that. So these are the setups that we're going to want to target is when the Williams percent R is not in an extreme. So either overbought or oversold. We're going to want to find setups where the Williams percent R is located roughly in the middle of the range. Very nice optimal advance setup in here. If price is going to want to come to move lower, this gap should respect price. And my stop loss is going to go here, just for the longevity and the time of this video. Took half my position off above that high, so we've locked in profits just shy of that 2-to-1 risk to reward ratio. So we're going to see if price wants to rally out of here and take a stab at this liquidity pool here. Just quickly, guys, I'm going to go over the setups today. Okay, I posted these on my Instagram. But the price action was beautiful this morning. We'll go this. Excuse me. So just going down into a micro time frame, guys, we're gonna look. We could potentially get some optimal advanced setups going long again if and when we take out this high. Figure it out when we get there, but so here we had a beautiful short setup on the Dow Jones. This was pre-New York Open. Okay, you have the William percent R, the fair value gap, order block, okay, optimal trade entry. This was literally right before the open. Clearly got our 2-to-1 here. More than enough. Okay. What price level did we go short at? The 75 level. Just shy of the 80 level. Okay, and then coming over here, right, this was after the open. We have an optimal advanced setup as well on NASDAQ, US100. Okay, so these were the two setups. This is probably a setup that I would have taken this morning. I would have liked a little bit deeper retracement into the second fair value gap, right? That often helps with our risk to reward. But nonetheless, two beautiful setups here today. Okay, on the 1-minute chart, both at the open and after the open. And you can clearly see here as well, we have SMT divergence between the two indices. So we have SMT here, and this begins our market maker buy model, and ultimately us seeing higher prices. So go back and study those two examples. They're great examples to study. And preferably, guys, right, just logically with this setup, right, we want to see this FVG in here hold, right? We want to see this FVG support price and rally higher, and we want to see this fair value gap in here become a breakaway gap. So we don't want to see price come back down into here. We want to see price expand from this small inefficiency that we have in price higher for the buy side liquidity resting above the marketplace. If we do expand higher, Okay, looking at NASDAQ, US 100, we could potentially get a very nice optimal advance set up to go long, but I would only be looking at that for potential longs if we expand up and through the current high, leaving a fair value gap. So on NAS, right? I'll just show you guys what I'm thinking and what's going through my mind. Right? So what we want to see, like just what's going through my mind, potential optimal advanced setups coming a little bit later in this session. Okay, is we would need price to rally through this high here with speed, leaving a fair value gap, because then we would have balanced price range. Okay, order block, there's a balanced price range in here as well. And then, but I'd want to see it rally with speed, leaving a fair value gap. Okay, this then, and only then, computer's moving real slow. This would then, and only then, give us potential optimal advanced signatures with the William percent R to go long. Right? So this is how we frame these types of optimal trade entries, quote unquote, or setups, is especially when that William percent R is not in an extreme. So like I mentioned earlier in this video, when the William percent R is not in an overbought or oversold condition, when we have highs and lows of the William percent R forming in the middle of the range, those are going to be our best setups to take. So we're going to want to see this fair value gap hold price. And we'll watch it play out. see what we get. All right, guys. So as soon as this fair value gap gets traded through, if and when it does, okay, I'm going to stop the video. It's either this fair value gap should hold and we should rally out of here to the buy side liquidity. And if that doesn't happen, if we close below this gap, I'm going to end the video. So I got some things to do today. All right, guys, what I'm going to do is I got to head out. So just going to end the video here. I really hope you guys found this video insightful. Okay, and this is the good thing about this trading plan and this framework is that even though I slept in this morning and missed like two really beautiful 2-to-1 R setups, okay, I came in here at the PM session and got my piece of the pie, per se, right? I did my job, executed when I should have executed. My risk was good. technically we could have put the stop below the low. I mean, I kind of like giving myself some room. Roughly a 1.8 to 1, guys. And if we go to the 15-second chart, okay, the 2 to 1 got hit. I didn't take this trade on the 15-second chart, right? But if we did, the 2 to 1 would have gotten hit. Yeah, overall, very, very nice trade. I'm still anticipating price to potentially get back above those equal highs that we marked out. Okay. With that being said, guys, I hope you guys found this video insightful. All the videos that I post, you guys should be watching multiple times. There's a lot of gems in them, and you're not going to pick up on all of them the first time you watch it. So I highly recommend you watch the videos more than once. But again, with that being said, guys, I got to head out. I hope you guys have had a blessed day. And until next time, good luck and good trading.